Steve Moore, Unleash Prosperity co-founder, WABC radio host star. We have Art Laffer, former Reagan economist. We have Michael Faulkender, former Deputy Treasury Secretary. Gentlemen, thank you. We'll be putting various charts up as we go along on the full screen. But Arthur, I begin with you. Wages are rising faster than prices right now, just in Mr. Trump's first 8 or 9 months. And the second point is, I know some grocery prices, some prices jump up, other prices fall down. But on the average, if you take a look at the story, real income is rising and grocery prices are barely rising. I mean, 2%, what did I say? 2.1%? This is the affordability crisis? This is the lefty media blaming Trump, who all of a sudden is an inflationist, with 2% rise in grocery prices? Actually, less than that on a cumulative basis. I don't get it, Arthur. I don't understand any of it.
Well, what you'd expect, Larry, is exactly what's happened. You know, we have the economic growth. We got the big, beautiful bill, which made permanent those tax cuts. We got no taxes on overtime, deduction of car loan interest. We've got all of that sitting there, and all of it's been really working in the economy. And with an increase in the supply of goods and services, what would you expect but falling prices, not higher prices? I mean, the Fed's got it all the way backwards. And, you know, when you look at this economy, I think it's really exciting. And I think it's just the beginning story, Larry. I think we're going to see a lot more growth coming. I think what the Atlanta Fed and what Bessent just said is really true. We could get growth rates in the 4 and maybe even in the 5% categories for certain short periods of time, which would make a huge difference on real wages and on the future of the economy and on elections. And I just can't wait. It's exciting.
Mike Faulkender, you know, Trump, people forget this, maybe they don't. This is Trump's second major tax cut, right? He had one in the first term, you were in there, and he had one in the second term, you were there for that too. It's interesting to me, Reagan had 2 tax cuts. Now, Reagan was coming off a deep Carter recession, I'll get that. But Arthur's point, you know, over the time, Reagan's economy grew at just about 5% at an annual rate for over 7 years. And I would say 4 to 5% is not out of reach. But the part that galls me the most is this inflation business because of a couple of groceries. These are real numbers. I got these numbers. These are numbers from the Consumer Price Report, okay? Groceries are barely rising. And the idea that he's some kind of inflationist knocking out everybody's affordability, this is insane.
This is just another attempt by the media to suggest that the president's economic policies aren't working. But of course, we saw the success that they brought us the first term, and he's only just getting started with the second term. The tax cuts that were enacted in July, you're going to start to see those refunds show up in the first quarter, which is why Secretary Bessent has talked about how strong he anticipates the first and second quarter of next year being. Couple that with the impact of the president's plans for energy. If you bring down the cost of energy, that's going to permeate throughout the economy. And of course, finally, if you look at the fact that housing prices are always measured with a lag, and so the CPI number that you were talking about is probably overstated in terms of what a forward-looking inflation is going to be, because we know the pressure on housing is coming down. Vice President Vance talked about that last week. Fed Governor Myron talked about that.
Immigration for 6 months ended. That's it. 6 months, nothing. So nobody was prepared for the influx of 15 or 20 million illegals, which bid up rent prices, which bid up home prices in general. That's washing away. That's washing away. We will see that washing away very soon, will we not?
That's right. You see those units coming back online, and the rest of the population is going to be, you know, the American citizens are going to be able to reclaim some of those housing units, and that's going to bring down pressure on prices, and that is going to show up in the CPI numbers and really go at the heart of the affordability issue, because home ownership affordability and shelter prices are such a large portion.
Well, Steve Moore, the other thing is, I want people to talk about growth. I mean, I don't know why, but the second quarter came in at 3.8%. Nobody's talking about that. The Atlanta Fed says the third quarter is coming in at 4.1%. Nobody's talking about that. In other words, one way to solve affordability is grow the economy rapidly, all right? And that will boost wages, and wages will rise faster than prices, groceries or otherwise, and that will make life very affordable. All right, even Gen Xers who are very dour, who don't want to work or anything, even those guys will have a down payment from their income if wages rise faster than prices. Trump doing this for the whole country. Why doesn't anybody talk about growth, supply side growth, tax cuts, deregulation, drill baby drill? What's wrong with that? Why doesn't anybody talk about that?
Well, you're exactly right. And in fact, if you look at the growth rate over the last 6 months, it's been, as you said, close to 4%. If we could maintain 4% growth for the next 3 years, which I believe we're capable of doing, you know what happens to the national debt? It starts to absolutely go down as a share of GDP. We solve the deficit crisis. But the other thing that people aren't paying attention to is the wealth effect of what's happened with the stock market and other asset values in the United States just over the last 10 months. You know, we estimate that the average 401k plan has increased in value by $30,000 to $40,000. The left acts as if the only people who own stocks in the country are Elon Musk and Warren Buffett. No, not all Americans, but most Americans are feeling the benefits of the wealth effect. And our numbers show, by the way, they verify what Kevin Hassett said this morning, that the average family real income, median income, since Trump came in office in January, is up by $1,200. Where's the affordability crisis if people have $1,200 more after tax, after inflation income than they did before? These are solid numbers.
We've got we'll put the chart up again. I think we put it up before. We'll run the real income chart again. It's a third back. Biden lost about $3,300. That was a bad loss. People are still, reeling from that. But so far under Trump, they've made a third of it back. I think that's terrific. Art Laffer, the point here, though, is, are we once again underestimating supply-side economics and the Laffer curve and the growth capabilities? That's why I wanted you to weigh in on this whole story. And by the way, I want to raise a point. Kevin Warsh in the newspaper this morning, the Wall Street Journal, Kevin says, you know what? The Federal Reserve should be shrinking its printing presses, and that'll find plenty of room for lower interest rates. Instead of having all these Fed weenies running around talking about how the Fed can't cut rates and causing the market to sell off. Kevin Warsh has the story right today. Get the balance sheet lower. That'll open the door for lower interest rates. That opens the door for loans to medium and smaller size and brand new businesses. What's wrong with that? It's like somebody has an allergy to lower interest rates.
Yeah, I think Kevin's just right completely on the balance sheet. What you need to do is bring that balance sheet down. You have tight money and you have economic growth, and the combination leads to lower inflation and higher real wages across the board, and that's what you're seeing. What amazes me, Larry, if I can just say, they've stopped all net immigration coming into the U.S. In fact, I would guess it's outgoing, and yet real growth is still way up there, 3.8 and 4.1%,
right.
Not counting that were huge amounts of people coming across the border before, and now they're going back the other way, which should lower growth quite substantially, but it's not. The growth is really much, much higher than they're saying, because the change in the population growth is really quite substantial. And I hope Kevin Warsh is our new head of the Fed. I think he's the best guy around. He really knows monetary policy, and we can have a long-run prosperity, low inflation, just like we did under Reagan.
By the way,
I think that's going to happen.
Larry, can I just add one thing to that?
Well, just let me add. Hang on one. I just want to know, to Arthur's point, almost 2 million people have self-deported just in the 10 months. Almost 2 million. And you'll probably get another 2 million self-deporting next year. I just say self-deporting. That's apart from the wonderful job that ICE and the other authorities are doing. And we're going to talk about Charlotte, North Carolina in a moment. But they're self-deporting. I think that's something. Go ahead, Steve.
I was just going to say, I want to repeat a point that you made on your show last week that's so critical. Most Americans have not felt the effect of the tax cut, that Mike Faulkender and Scott Bassett and others put together, because they haven't changed the withholding. The point here is that next year, in 2026, the average family is going to get a $2,000 reduction in their taxes or increase after tax income. That's a big deal, $2,000 a year.
Yes, no, I couldn't agree with that. Mr. Trump, by the way, wants to put another $2,000 in for a tariff dividend. You have a thought on that, Steve Moore?
I don't like that. I
You
don't
like
like that
that?
idea.
Yeah,
I
but-
think Arthur Laffer taught me that you don't send checks out to people, but I like most of the other stuff that Trump is talking about. Why not use that money to cut income tax rates, Arthur?
Yes.
Yes. Actually,
Yes.
we'll get rid of the filibuster, and we'll get the income tax rate down to 15% for individuals and corporations. Mike Faulkender, speaking of the Fed, I want to add one point. I don't want to let this go. A report, this is so great. The Federal Reserve puts this out on a Saturday when there's no press. Another case of Federal Reserve insider trading. A governor, again, this woman Kudlow, nobody could figure out why she left suddenly last summer. Now we know, many months later, she almost escaped public notice. But my point is, this is at least the 5th Fed governor or Reserve Bank president who have, I'm going to say, guilty of insider trading or charged with insider trading or failure to deal with the compliance and ethics involved with insider trading, right? If I say guilty, what I mean is there's an ethical thing here, there's a the culture of compliance and the culture of ethics at the Fed has collapsed under Jay Powell.
It really is shocking to me because you and I both know as former executive branch officials that this is just not tolerated. There are enormous disclosure requirements on us, and the fact that they were not held to account at the Fed, that these governors and bank presidents are not held to the same standard, and that as soon as Jay Powell finds out about this, that there's not immediate disciplinary action taken is unexplainable. So I think that really speaks to yet another case of mismanagement we have seen out of Fed Chairman President Powell, that he did not impose a standard of, as you said, ethics and compliance, all the while they're creating all of these problems in the monetary policy lane that Kevin Warsh talked about in his piece.
Yeah, I mean, and even now, the Lisa Cook piece is pending on mortgage fraud. He's defended her. He's let her get away with a lot, I would say. By the way, these insider trading allegations and ethical improprieties were frequently made during blackout periods before the FOMC, the policy-making board. Really, and she tried to get a waiver, Kudlow, and he finally wouldn't give her another waiver. I mean, he has done more to damage Federal Reserve independence. People talk about Donald Trump. Yeah. He has done more to damage Federal Reserve independence than anybody I know of.
I agree completely, because if you look at why the Federal Reserve independence is being examined, it's because of the failures of the Fed. Whether it was their mismanagement on inflation, the failure of SVB, these ethical violations, the seeming politicization of rate decreases under when Biden was president, all of these things naturally call for greater oversight from the Congress and from the administration on what's going on at the Fed. And quite frankly, if Jay Powell is not going to get his own shop in order, then it's going to be no wonder when somebody else has to come in and impose some discipline.
The clock is ticking on that whole story, but I can't wait. Anyway, Steve Moore, thank you. Art Laffer, thank you.